Most traders advertise flashy cars, flashy vacations, women all over Instagram and TikTok. And of course, it's to grab your attention. Well, now that your attention is grabbed, you want to start trading. This can be in any market. The concept remains the same. In this video, you will learn 5 things you should know before you place your first trade.
Wake up, filthy. I'm working on lying.
Trading isn't that get-rich-quick scheme you see plastered all over the internet, but it's also not something that takes endless years and years to get consistent at. Either way, it does take a bit of time to become a consistently profitable trader. You should expect around 6 months to a year to be enough time to hone your skills and to test a strategy that you can become confident enough in to trade in most conditions. The problem most newbie traders have is that they jump straight into the market. And I don't know about you, but those were some of the worst times I've experienced in the markets. Some trades would win, others would tank. I'd make a little money, I'd lose a lot. But worst of all, I didn't understand why. Traders who are new to the market should spend a few solid months practicing a strategy in a demo account environment. These traders simply don't understand how a strategy works. You might be asking yourself, how do I know this? I was one of them. They need to learn how to adapt to the different market conditions and how a strategy works. The problem is, they enter something I like to call the cycle of doom. Because things don't work out, they tend to abandon the strategy. In search of the mystical holy grail of trading, they find something new and eventually repeat this process over and over. This happens until they either get it right or they quit altogether. If this sounds a little familiar, I guarantee you it's why the markets haven't met your expectations. If you choose this path, you won't be a successful trader. Rather, commit to spending the next 6 months at the very least and practice a certain way of trading or a specific strategy. If you do this, you stand a good chance of becoming the trader you've always dreamt of. Different instruments and markets require different amounts to start with. I never knew this when I first started out. It's not like there's an all-inclusive manual out there, is it? Stocks are probably the most popular but also require the most money. It depends on where you go between brokers, but depending on the type of brokerage you look at, you could get quoted very different capital deposit amounts. Some require $5,000 as a minimum. Others happily accept $300. I've noticed they usually do this because of the type of client they're trying to attract, and not what's best for the trader at hand. As a general rule of thumb, I'd say anywhere over $1,000 should be a good starting place. Anything smaller, and you'd risk paying away a lot of your money to fees and commissions. Forex, on the other hand, is a little different. You can start with as little as $30 and up to $300. Still, I wouldn't go for anything under $500 if you want to grow your account properly. Some Forex brokers tend to charge less in commissions and fees, so it is possible to start with a lower amount. But just because you can, doesn't mean you should. What I've found a lot of newbie Forex traders do is start with a tiny amount, get frustrated at the lack of growth, and then enter that dreaded cycle of doom. They start breaking all sorts of rules, trade positions far bigger than they should, gear themselves to the hilt, and eventually blow their accounts. Don't do this. If you're looking to trade Forex, start with at least $300. Less is really not recommended. Derivatives is its own ballgame entirely. Most brokers look for $500 as a minimum deposit amount, but the same applies as above. Fees on these types of accounts can destroy your account if you're not careful or vigilant. Don't feed your broker's wallet at your account's expense. This was one of the biggest lessons I learned. Hollywood paints this super unrealistic portrayal of what trading the market is really all about. Fast cars, fast drugs, and even fast women. That's what Hollywood wants you to believe anyway. Just take a look at some of these movies to see what I'm talking about. What I expected to make and what actually happened were two different things entirely. I didn't understand the mechanics of trading, and my expectations suffered because of it. Most traders chase huge profits and bet big in order to get them. However, new traders should only risk 1% or 2% of their account on a trade. That means that if you lose a number of trades, you only lose a small portion of your portfolio. And trust me when I say it's going to happen more than you think. Think about it like this. Risking 1% per trade, traders could make between 10% and 30% a month. Don't get me wrong though, they'll be losing months as well, and some months that could even topple 30%. But I'd say if you're averaging out at 20% a month, you can consider yourself a fantastic trader. Depending on how much you have funded in your account, that should give you an idea of how much money you can make trading the market. One thing new traders don't take into account is that the more capital you have, typically the lower the percentage return. It's easier to make high percentage returns on small amounts of capital than it is to make the same return on large amounts of capital. You need to remember that these figures are based on hours of backtesting, hard work, and time spent on a solid methodology or strategy. It'll more than likely take months to even a year or two, if you're serious, to get anywhere near as good as what I mentioned. There are tons of obstacles when you start trading. Most of them are knowledge-based though. That is, you don't know what you don't know. And a lot of them you only find out when it's too late. There are a lot of things the market can and will throw at you. And I learned this the hard way. Each trading day is different, and you need a method or approach that works in nearly all market conditions. Does that mean you're going to bank winners day after day? Of course not. Remember, with a great strategy or system, you may still have a few losing days every month once you've got comfortable with your strategy. But overall, you'll find yourself in the positive. You need a strategy that adapts to the various conditions the market will throw at you. Typically, this means you'll want to avoid overly complex systems, which contain or rely on tons of indicators, or those that require constant streams of research. One of the obstacles most traders are completely oblivious to, or are simply just not aware of, are the psychological ones. Trading is about mastering yourself more than it is about mastering the market. You can't master the market. The quicker you come to realize this, the better. There are no guaranteed profits in trading, and this tends to mess with a trader's head and mind. New traders are extremely susceptible to this and end up doing things they normally wouldn't do. This can be a vicious cycle, which leads to more trading mistakes and ultimately money being thrown down the drain. If I had a buck for every magic system or holy indicator out there, I wouldn't need to trade at all. I'd be a millionaire. There are so many gimmicks and flashy traps out there, it's little wonder so many people lose money in the markets. Software tools, gimmicks, they're everywhere. And all they do is part you with your money, not to mention wasting your time. The get-rich-quick products that pop up every time you open an internet browser, to the software and gimmicky products out there, all have a typically tiny lifespan. Some might even work for a little while, but when they crash and burn, so will you and your portfolio. The only way to avoid this is to make adjustments to the actual software itself, like you would any strategy or trading system. But that's not really an option, is it? And the people selling this nonsense know that. Rather than getting suckered into this stuff, you're far better off spending time and money into the one thing that can actually make a difference. Invest in yourself instead. Read books and products on the market, speak to other traders, find a mentor, follow what some traders have to say on Twitter. Brush up your knowledge with articles. There are so many ways to do it that not doing it is actually irresponsible. Invest in your own trading education, not the gimmicky stuff you see online. From the start, invest in yourself. That way, no matter what happens, you'll have the skills to get the job done.